My name is Donovan Day. I'm a commercial account executive at Kingsgate Insurance. We're an agency from Fort Dodge, Iowa, and we've specialized in habitational insurance for the better part of 25 years now, which includes condos, townhome associations, and apartments. Today we're going to talk to you a little bit about how a condo master policy works alongside a condo unit owner's policy to insure your unit.
And I'm Chelsea Hetherington, a personal lines insurance account manager here at Kingsgate Insurance. I specialize in home and auto, as well as condo, which we'll be talking about today.
As a unit owner, there's two important documents you want to become familiar with. Maybe one if you have an older association, but over the course of the last 30 years, I would say almost all associations have evolved to have two distinct documents. The first is the condo association bylaw. This is a self-governance document, and it's going to kind of address how the association itself runs. So think of things like how many board members there are, what term lengths the board has, things like that. The second document, which is usually more important in the insurance discussion, is the CCR document, which is the Covenants, Conditions, and Restrictions document. That document is going to have an insurance section inside of it. Inside that section, on a general basis, we're going to see one of two things. You're either going to have an all-in type insurance agreement where the association's insuring everything, all the way to the cabinets, countertops, flooring, etc., or you might have a shell valuation where the association is going to stop at, say, the drywall, and you're going to have the condo unit owner policy take in at that point. So there can be a very big variance in values depending on how your association agreement reads.
As Donovan mentioned, it's crucial to set an appropriate amount to insure your condo for. To do this, we use a replacement cost estimate tool. Your living space is unique to you. What do you do differently that your neighbor doesn't do? Consider the finishes in your kitchen, for example. Do you have granite countertops or custom cabinetry, hardwood floors? Things like this go into that replacement cost estimate tool to determine the amount to insure your unit for, so that at the time of a loss, your expectations are met on how repairs are completed.
So what specific items are you responsible for insuring? Look inside your CCR documents, and you got to read the insurance section to determine if you have an all-in or a shell type agreement like we discussed earlier. If it's a shell, you're going to need to go ahead and look at the definitions portion of the CCRs and review what's defined as typically either the living unit, the condo unit, or maybe the unit. It varies a little bit from a CCR to CCR, but whatever is defined as the living unit or condo unit is what you need to include in the valuation Chelsea's talking about. All those things are going to be what your dwelling coverage limit is going to be derived from. And it's really important you understand that all-in versus shell component, because an all-in type agreement where the association's insuring everything from the exterior shell all the way to your cabinets, countertops, etc., you may only need $25,000 or $50,000 of dwelling coverage on a policy that you own for that. However, if you have a shell type agreement where you're insuring everything from the drywall in, you may need hundreds of thousands of dollars up to millions of dollars. So it's really important that you get that right. If you're unsure how to interpret your agreement, make sure to send that to your insurance agent to review so that they can get the right value for you.
As I had mentioned earlier, it's very important to set the correct amount of coverage for your condo unit. Another important thing to review is to make sure you've got the correct policy coverage. See, there's a homeowner's policy, renter's policy, and a condo unit owner's policy. The big difference here is on a renter's policy, you have no coverage for your dwelling. The dwelling is what we're setting that amount of coverage for, as we had talked about before with the custom finishes and items like that considered. So it's very important to make sure you have the appropriate form, the policy form, the H06 for your condo. Some other key elements of the condo owner's policy, we've got 4 of them. We've got the dwelling, other structures, personal property, and loss of use. The dwelling is what we're setting for the coverage of the unit itself. Other structures is used for if you're responsible for a detached garage or shed or something like that. Personal property, just like it sounds, it's insuring your contents, your belongings. Oftentimes this is set at a rather low limit, so you'll want to make sure to review that and make sure it's an appropriate amount. Loss of use, that's going to cover the cost for any temporary housing or dining expenses while you're not able to live in your unit after a claim. One other very key element of a condo unit owner's policy is loss assessment. This is oftentimes used if your condo association ends up billing all of the condo unit owners in that facility for hail damage, for example, to the entire building. It will cover the cost of the association's deductible, so you as a unit owner can be billed for that, and your loss assessment from your unit owner's policy can cover you. Most often, That base policy coverage limit is set rather low. It can be increased, typically at very low cost. So something to review with your agent.
As Chelsea was saying, loss assessment coverage is a very important coverage for an HO6 unit owner. The reason for that is on the commercial side, when we're marketing accounts for a master association policy, there are specific large deductibles typically applied for things like wind and hail in the Midwest. Those deductibles can be very high, 6 figures in many cases for larger associations. The association documents allow the association to bill that back to the unit owners. So you want to make sure that you have a large coverage limit there. Many times we'll have association deductibles for something like a wind hail loss that might be $100,000, $250,000. So on a per unit basis, it's pretty common to see that may break down to $4,000 to $10,000, maybe even more depending on how large the association is. So you want to talk to your insurance agent and make sure you have a substantial loss assessment coverage limit, and also ensure that you have no sub-exclusion for association master deductibles, because some carriers will exclude loss assessment coverage for an association master deductible. You want to make sure your policy covers that.
Thank you for taking the time to watch this video with us today. If any of the information discussed struck a chord with you, reach out to your agent to discuss, or even contact us here at Kingsgate Insurance and we can review your policy for you.